So good morning, everyone, and welcome to your weekly market outlook with me, Geoffrey Gishanga, educator and market analyst at Scope Markets Kenya. So it's a very bright Monday morning, and highlights of last week, we had quite a number of fundamentals that happened last week, from the Euro manufacturing PMIs to the pound manufacturing PMIs. We also had the Federal Reserve Chair, Jerome Powell, speaking. We also had the Australian CPI happening last week. We also had the Swiss National Bank releasing their monetary policy statement. And also we had the United States GDP release. We also had the weekly US unemployment rate. We had the GDP release for Canada. Part of the week and the highlight of the week was the events that we had at Nyeri and Nanyuki, which was very amazing, and we are going to get into the full detail of that. But first of all, let's start off with what we are looking at, what we look at fundamentally, and also what we will be expecting for this week as we start off the new week today. Remember that we are ending the month of September, we are ending the month of September, also ending Q3 as we get into the month of October. We also get to step into the last quarter of the year. So it's a very good time to be reviewing your quarterly targets or your quarterly achievements or your quarterly goals as well. As we get to approach the end of Q3 and start of Q4, and that means we're also getting to approach the end of the year. Let's get to have a smooth ending with targets achieved. So with that, let's get to look at what we are expecting, or what actually happened, then what we are expecting for this week. So we had the Eurozone manufacturing PMIs, where it registered at 52.4 in September, rising from 50.5 in August, and this marks the fourth consecutive month above the 50 threshold. Okay, signaling expansion. So when it is above 50, it shows it is a positive expansion, or it is a positive. When it is below 50, it's usually showing weakness or a negative. So the services sector, the activity accelerated to an 8-month high of 52.5, supported by the launching of new projects, and the output maintained its growth. The output maintained its growth streak since March, but slowed slightly, recording 52.2, down from August's near 3.5 high. So overall, Germany ended the third quarter on a strong footing, with growth driven mainly by services and steady manufacturing output. Okay, that is for the Eurozone. Now let's get into the pound, into the UK manufacturing PMIs as well. So for the UK, it is to 51 in September from 53.5 in August, which is a sharp slowdown. So in terms of services sector, we had continued expansion, supported by business and consumer spending, though growth was limited by weak domestic economic conditions and geopolitical uncertainty. Okay. Then we have in the manufacturing sector, the output declined at its fastest pace since March, mainly due to weak domestic and export orders. So the divergence highlights the resilience of services, but persistent weakness in the UK, manufacturing. Okay. Then we have the United States PMI. So last week was quite filled with a lot of PMI releases. We've had for the Euro, we had for the GBP. Now we are looking at the USD manufacturing PMIs. So the US manufacturing PMI dropped to 53.6 in September from 54.6 in August. So this reading still reflects solid growth, but signals slowing momentum for the second straight month. So expansion continues across both services and manufacturing, though at weaker rates. Okay, the tariffs are widely cited as a driver of higher costs. However, firms struggled to pass these costs on, with selling prices rising at their slowest pace since April. Then inventories, the largest rise in unsold factory stock in survey history, attributed to slower than expected sales. So despite easing, Q3 still marked the strongest growth period since late 2024. That is now late last year. Okay. Then you had the Federal Reserve Chair, Powell, speaking. He had some remarks that he mentioned last week. So the Fed Chair, Jerome Powell, adopted a cautious stance on further rate cuts. The current federal rates is at 4.25% after the recent 25 basis point cut. So Powell warned against cutting rates aggressively, as this could risk reigniting inflation. So conversely, also, keeping rates high for too long could unnecessarily weaken the labor market. So Powell's comments contrasted with Fed officials like Stephen Miran, who has urged faster rate cuts, to 2% or 2 to 2.5%. So there's been like conflicting ideas within the members of the Fed. So this cautious tone suggests the Fed remains data dependent with no clear timeline for further easing. Okay, remember we have another Fed release in October, so it's also something to closely observe and see. Will there be a potential rate cut during the Fed release in October? Chances are high we may not have a potential rate cut, but that is just an anticipation or a forecast. We can only tell during that time once it actually happens. Okay. Then we have the Australia's CPI. So Australia's CPI was also released last week, whereby we saw the monthly CPI was at 3%, up from 2.8%. The key drivers was housing, which was had a positive of 4.5%, food and non-alcoholic beverages, a positive of 3%, alcohol and tobacco, a positive of 6%. Then underlying inflation. So the CPI excluding volatile items rose 3.4% year on year, up from 3.2%. The trimmed mean CPI stood at 2.6%, slightly down from 2.7%. So this shows that inflation remains elevated, keeping pressure on the Reserve Bank of Australia to maintain its restrictive stance. Okay. Then you have the Swiss National Bank. Now the SNB, which is the Swiss National Bank, kept its policy rate unchanged at 0%. The bank sites deposited are remunerated at the policy rate with a 0.25% discount above thresholds. Then inflation edged up from negative 0.1% in May to 0.2% in August, driven by tourism and imports. Then the SNB reaffirmed its willingness to intervene in FX markets to maintain price stability. So inflationary pressures remain contained, allowing Switzerland to sustain its accommodative stance. So the inflationary pressures remain contained. Then for the United States GDP release. So the GDP growth for the United States was at a positive of 3.8% annualized, revised up from 3.3%. So some of the key drivers are decrease in imports and strong consumer spending. Then offsets, you have declines in investments and investment and exports. Then you have the final sales to private domestic purchases. That is a positive of 2.9%. That is revised up from 1.9%. The industry contribution, we had goods producing industries at a positive of 10.2%. Services producing industries at a positive of 3.5%. And the government at a negative of 3.2%. So this marks a strong rebound from Q1's contraction of negative 0.6%. Okay, so this is a strong rebound and a good growth. Then you have the weekly unemployment claims for the US dollar. So initial claims was at 218,000, down 14,000 from the previous week. The 4-week average was 237,500, showing a modest decline. Then insured unemployment was at 1.926 million, down 2,000, and the insured rate was stable at 1.3%. So this shows that the labor market resilience persists, though claims remain sensitive to shifting economic conditions. Okay, So then we come to the Canadian GDP. So we had quite a bit of PMIs and GDP releases last week. So into the Canadian GDP release. So the monthly GDP was at a positive of 0.2%, ending 3 months of contraction. We know how Canada has been really affected by the tariffs. Canada was actually among one of the countries that were largest hit with the tariffs. Then you have the key drivers. The key drivers are mining, quarrying, and oil and gas, having a positive of 1.4%. Then manufacturing, a positive of 0.7%. Then services, a positive of 0.1%, led by wholesale trade and transportation, which is at a positive of 0.6%. Then weakness, we had the retail trade fell at a negative 1%. So what does this show? It shows that Canada's rebound offers cautious optimism, though the third quarter growth prospects remain uncertain. So there's been a lot of uncertainty, especially for the third quarter. The third quarter and the second quarter for Canada has been a little bit tough now because of mainly and majorly because of the tariffs. Then you have the United States core PCE. The personal income had a positive of $95.7 billion. That is up 0.4%. Disposable personal income was at $86.1 billion, positive of 0.4%. Personal consumption expenditure, now the PCE, was at $129.2 billion. That is a positive of 0.6%. The savings rate was at 4.6%. The key driver, the service spending rose $77.2 billion, and the goods a positive of $52 billion. So the core PCE, the Fed's preferred inflation measure, suggests persistent consumer strength, but modest progress towards inflation moderation. So there is persistent consumer strength. So that shows that we have higher purchasing power. So there is more people can be able to afford goods and services. So that means there's more money coming into the economy. Okay. Then let's get into the corporate earnings side. Last week we had Micron Technology releasing their corporate earnings. Let's see how they came out. So for Micron Technology, we had the earnings per share was at $3.03 adjusted versus the expected $2.86. Then the revenue was at $11.32 billion versus the expected $11.22 billion. Then the outlook, so the projection for the first quarter of 2026, revenue projected at $12.5 billion, above analysts' estimates of $11.94 billion. Then the net income was at $3.2 billion. That is $2.83 a share versus the $887 million, which was now $0.79 a share last year. Then the growth drivers are AI-driven demand for high bandwidth, memory, tripling cloud unit sales to $4.54 billion. Then the shares nearly doubled in 2025. Okay, so the CEO Sanjay highlighted Micron's unique position as the only US-based memory manufacturer, underscoring its AI growth advantage. Okay, so having that, let's see the conclusion. We have last week's data reflects resilient but uneven global growth. The US shows solid GDP momentum and stable labor markets, but cooling PMI and cautious Fed policy. Then Europe continues to diverge, with Germany's services driving growth, while UK manufacturing lags. Then the Australian inflation pressures and steady policy stances by the SNB, the BOJ earlier, highlight regional differences. Then corporate earnings, particularly Micron, underscore the role of AI and technology demand as key growth drivers for markets. So the balance of risk remains tied to tariffs, geopolitical tensions, and central bank policy paths, all of which will shape the fourth quarter's 2025 market dynamics. Now, remember, I've just mentioned we're stepping into Q4. as we get to end the month of September and start the month of October. Now, the highlight of the week was the events that we had, the Forex Mtaani events that we had in Nyeri and Nanyuki. First of all, a very huge thank you and shout out to everyone who attended the event. It was an honor and a very great moment that we had together. We had a lot of learning, we had a lot of very educating moments together. And I look forward to more of such events as we get to expand our reach across the various regions. It was a very exciting, informative, educative, and eventful time. So a very huge thank you and shout out to everyone who came and graced the event. So as we get to start off this week we are looking at various fundamentals as well, considering it being the end of September and also like the first week of October. So for this week, we are looking at Tuesday, September 30th, that is tomorrow. We are looking at the Chinese manufacturing PMIs. We also have the AUD policy rate. The Reserve Bank of Australia will be releasing their monetary policy tomorrow. Then we have tomorrow will be also a CAD, the Canadian bank holiday, and also the USD JOLTS job openings. Then on Wednesday, 1st October, we'll be having again still the Chinese bank holiday. Then you'll be having the USD ADP non-farm employment change. Then also the USD manufacturing PMIs. Then on Thursday, October 2nd, we'll be having the CHF, the Swiss franc CPI, and also the US unemployment claims. Then Friday, we end the week by having the Euro bank holiday. We'll be having the USD average hourly earnings. We'll also be having the anticipated US NFP, non-farm payrolls employment change. And lastly, we will be having the USD unemployment rate. So from that, you can tell that this is going to be quite a very volatile week for the dollar. Quite a lot of high impact news that will be affecting the dollar, that will be affecting the Australian dollar, that will be affecting the Swiss franc as well. So quite a week to monitor all dollar pairs. It's quite a week to monitor all dollar pairs, especially due to the non-farm payrolls, and also the ADP non-farm employment, and also the JOLTS job openings that will be released tomorrow. So with that, guys, I'd like to wish you all a very fresh and productive week ahead. And I'd like to wish you all a very fresh and productive week ahead. And let's have a very energetic week. So looking forward to seeing you on the next one. So stay blessed and stay financially literate.